I have started recording. So we will be going through the pivot support and resistance. I wanted to conclude the session today as no one has joined. Probably we may need one more session. Okay, so pivot support and resistance. This is the pivotal support and resistances where you can find what is the support zones and what is the resistance zones, and there are so many things over here. Everyone is looking at what's best: prior highs and prior lows, gaps, trailing bands, envelopes, Fibonacci retracements, moving averages, trend lines. Some of these tools are actually used to find support, resistance, or believed to be support or resistance. These tools are subjective and unnecessary when you understand what is genuine. So, out of all these, what do you think is genuine is what you have to find out. You have to find out your own strategy. Okay, what works best for you is what you have to find out. Okay, so this is a minor support area. What is this? There is a small gap up after there is a touching point and it converges, and afterwards it diverges. So it goes up from one particular level. Okay, so those are the minor support areas, and minor support areas are considered to be buy at support and sell at resistances. Okay, so these major support areas, right? So these are the places where you require the confirmation and of secondary test. So it may come down, or sometimes if it actually hits it too much, hits any support or hits any resistance, it is as strong as the demand or supply is available at that point of time. Okay, so most of the people will think that, okay, I didn't sell at this particular time, so it has reached to that particular point, and let me sell it off. So at the support zones, at the resistance zones, people will sell off, and at the support zones, I didn't buy the last time, so let me buy it this time. So people will buy at the support zones. If there are no buyers at the support zones, or if there are no sellers at resistance zones, it will go ahead, it will go up. Okay, so that is the place where you will have to buy if it goes above the resistance, and if it goes below the support zones. You have to see there is a confirmation which is required. Okay, so you have to see if this is a support, this is a resistance zone, it has to touch, and afterwards it has to touch again to consider it as major support area. And you will not have any it is just like this. When it comes down, it stops at one particular area and goes up. There is no particular confirmation of this particular point where it will stop. Okay, so at this major support and major resistance zone, you will have to wait for the second candle to touch it and afterwards come down. That is the place where it will confirm that this is a major support area. Okay, so this is pivot point trading. The resistance is considered as high plus 2 into the pivot low, and resistance 2, resistance 1, pivot and support 1, support 2, support 3. All these will be done by charts, online charts available. Okay, so if you want a chart, pivot, support, resistance calculator, everything is available online. You don't have to do anything. uh, what you need, only thing is you have to give, it is just an indication that at this particular point the market may go up or market may go down. That is what the indication it gives, the pivot support and resistance. Okay, just want to give you a calculator. See, only thing you need is you need the high, low, and close. So if you have these, it will calculate, say, let us say, let's consider 9647 as the high and 9565 as the low, and it goes around 9574. So So these are the pivot support and resistance zones. Okay, the pivot point. So barring this, what will happen is it will have a higher move, and these are the resistance zones. So if the market has to go higher, if the market has to, okay, my close is 9574. So I did a better from over here. So that's the reason it is giving too much of resistance zone. So 9707 is a resistance zone which you already know. How do you know that? That is because it has once touched that level and came down. It has never touched that level again. Okay. If you have to check the daily chart, if you have to check this daily chart, see, this is the zone where it has touched, and high of the day is 9709. Okay, so this is 9699. It didn't go ahead. 9709 is the highest market has scaled till now. Okay, so what is the resistance zone it is giving? 9707.66. So it is very near to 9709, and we already know that this is a very huge support, resistance zone. So 9677, let us see, around 9677, right? So this is the place. See, there are about three four candles which has closed at this, but no, four, there are six, and one touched this level and came down. Okay, so seven candles which has found resistance at this zone, and it has closed below this zone. So this is one of the huge support resistance zone which we already know. However, pivot support zones and resistance zones is already giving us this indicator 9605. Let us verify 9605. Where is 9605? Around this area, and there is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, no, 11, 12, 12 candles which has found support or resistance at this zone. Okay, that is one of the resistance zones. Now since it is below, it has a resistance zone. See, if it was above, it would have been a support zone. Okay, so these pivot resistance levels are calculated according to the high and low and close. So this is a very easy indicator which is given, and they will give you the calculations. They will give you all. They will do the calculation and give you the pivot, support, and resistance zones. So draw these levels on the charts. When it reaches here, see what happens for the day, and the support levels as well. Draw these. If it is above the second resistance zone, what will your target be? Your target will be the third resistance zone. If it opens, if it opens above the second support level, what will your target be? Your second support level, the first resistance level, will be your target, right? So that way, so if it opens, sorry, if it gets sold below the second support level, what will your target be? Target will be 9461, which will be which will be the support again. So when it opens above the resistance zone, the next resistance zone will be your target to reach, and the third resistance zone will be your third target to reach. Okay, if it opens at the pivotal level, you can see for market to move either way. It can move up or down. When it is moving down, you will find the supports over there. When it is moving up, you will find the resistance over there. Okay, so you have to wait for confirmation if it actually opens around the pivot level, pivot point level itself. Okay. Yeah, these are the calculation. A lot of traders will have a trade setup that triggers the same time that floor pivot level. So basically, what is mentioned over here is a lot of traders will have a trade setup that triggers at the same time that a floor pivot trader will be entering a trade in opposite direction. Okay, so what the usual user will be, a retailer will buy at huge highs. Okay, what his mindset is that when it is moving hugely high, he will think that okay, momentum is there in the market, so if I buy at this zone, it will go higher. So at that point, the retail trader will start buying. And at this point, the smart sellers are already there to get that stock, get that underlying down. Think after calculating the pivot support and resistance zones. Okay, so that basically gives information that at these points there will be resistances or supports, and it is well proven. So that is one of the reasons pivot support and resistance is really helpful. Okay, to find out what will trigger the market at these levels. Okay, so yeah, swing pivots from candlesticks. So it's showing the bearing engulfing pattern and bullish engulfing pattern, bullish piercing pattern, and bearish piercing pattern. Okay, so what does this engulfing pattern mean is engulfing pattern, when it is a bullish engulfing, it means that when the market is going down, what this bullish engulfing candle does is it goes above and beyond the previous candle and covers that previous candle completely. So from top to bottom of the body of previous candle, it will cover it. It will not have anything left in the previous candle. So it will cover the top to bottom, and it may or may not. It may or may not cover the previous candles as well. Okay, so what usually it happens is when the market is going really down, there will be a dead cat bounce. So what that means is when the market is going really low, there will be so many people who have already got the profit by selling at a higher zone. So what they will do is they will buy it. They will buy to take the M to M that is the mark to mark profit into real trade profits. Okay, so at that time what happens, at one particular level it actually goes higher, and it will go in the reverse direction of the previous candles, and it will engulf all the previous candles which it had. So when it is going really down, what happens when there is a dead cat bounce, there will be about 3 or 4 previous candles which will be engulfed, as in it will cover the whole of the previous candles and it will go higher. And at that point of time, the retail traders will think that the trend is reversing and they will start buying off. So that is one thing which you should not be doing. So bullish engulfing pattern, over here also there is indication that so after there is a bullish engulfing pattern, there may be a bearish candle also. Okay, so it may be a bullish engulfing pattern, afterwards a big bearish engulfing pattern again, which shows that bearish trend is here to stay and bearish trend is here to continue. So it is the same with bearish engulfing. So what happens is there has been a huge upside in the market. There are so many bulls who have been buying. At some point of time, they have to realize their profits. They will sell some stocks or there's some underlying assets. At that time, what happens is it will create a huge red candle when there is a huge sell in the market, huge red candle, and that red candle gives information that so it may be a start of trend or it is just a dead cat bounce. So at the higher level also there will be dead cat bounce. What happens? They will sell at some higher point to make sure that the market, I mean, not to make sure, it is just that they are selling and the market, the underlying asset which you are looking at goes down. So that is dead cat bounce at the top as well. So what it does is it covers the previous candles, all the previous candles, probably at least three or four of it. When it is a huge bearish engulfing pattern, it will cover three or four of it and afterwards go down, and then there may be a continuation of the trend. Usually the market has to give up its profits in order to make newer plunges above. So it has to go ahead. When it has to go ahead, it has to come down. And then it is just like it has to hit a trampoline to go really high. So when it doesn't come down, it will not go really high. So it can't keep on going higher and higher. It has to come down and then it has to go up. So that is how the market is. So here, what you can see here is there is another bullish and piercing pattern and bearish piercing pattern. Bullish piercing pattern is the the current candle. It at least covers 50% of the previous candle and moves higher. Maybe not 100%. When it is 100%, it will be a bullish and engulfing pattern. When it is a piercing pattern, what it does is it actually goes 50%, at least 50%, and above the previous candle. If it is a bullish engulf, bullish piercing, it will be a bearish candles previously. If it is bearish engulfing, a bearish piercing, it will be bullish candles previously. It will pierce 50% or above than the previous candles. And afterwards, if you have to see there is a trade going on at that particular time, you have to wait for the confirmation and then you will go ahead. So basic support and resistance paradigm. So support and resistance can help determine when the trend is when the trend is in question. So what support and resistance zone does is it either holds the market or it reverses the market from the current levels, right? So when a trend is when is a trend in question? So if it has a higher highs and higher lows, it means that it is a bull trend. So it is going higher and higher. So at some point of time, there should be a reversal as well. So these piercing patterns, these engulfing patterns show us there is a trend reversal happening or probably in the making. So at that time you have to verify if there is a pivotal support or resistance playing the role over there to reverse the market. If it has hit a resistance, then the market may come down and it may come really down if it has a huge resistance. If it has a huge support, it may go really high. Just like 95.50 has been a darling support for the markets, and every time it hits 95.50, it goes down and really down. That's how the market has played the cards this month. So the support and resistance, when there is a move to a major support in the uptrend or move to the major resistance in the downtrend, since both moves are negative. Okay, so what it means, when there is a move to the major support in an uptrend, so when it is an uptrend, what happens? The market has to keep on going higher. So that is what we think, right? However, there is a retracement. As per Elliott wave theory states that if the market does not retrace at least till the Fibonacci series of 61.8%, then it is not considered as a retracement. So if there is a retracement, and the healthy market always gives a retracement of at least till 61.8%. Okay, if the market doesn't retrace that much, then it is not a healthy retracement. When sorry, when the market goes high, what it does, it retraces back and it hits a major support zone. And if there is a downtrend, it keeps on going high, lower, and it hits a major support zone, and afterwards it retraces. So at that point of time, it has to come to one of the levels where it is a resistance for the market and then go down. So when it is a negative move, if it hits the resistance zone, it has to go downer. When it is a positive move, it has to go, it has to come to the support level, it has to go higher. Okay, so both of these place a really good support and resistance zones. So when it retraces back, finding support and resistance. So trend lines moving. There are many things which will be mentioned over here. I will not go through each and every point. So I mean, finding support and resistance. There are many ways how you can find out support and resistance. One is the Fibonacci series, which I usually do, and the second is the trend lines. I draw a trend line, right? In the blog, I'll keep on mentioning there is a trend line break or a trend line which has come up. So if it touches the trend line, usually it will go higher when it is high. If it touches the trend line when it is low, it will go downer. So that is what is the trend line. And the floor pivots, we just talked about the pivots. So you can look into the pivots and find out the support and resistance zones. Moving averages, I always keep on updating. 20-day moving average, 21-day moving average. When there is a crossover, usually there will be huge moves, right? So it usually plays as a support and resistance zones as well. So many a times I keep on mentioning that now it is below the 20-21 day EMA. So now this is a resistance zone, and usually when it is plunging higher and it has to retrace back, usually what happens, usually it will come to the level of 20-21 day moving average, and it will have moved really high after a breakout, and afterwards it comes to the 20-21 day moving average, takes support and plunges higher. Okay, moving averages, the swing pivots, floor pivots, everything can be considered. Okay, so swing pivots is nothing but it may be a resistance or a support zone which is formed now. Okay, there may not be any resistance or support zone at this point of time, just that market found a support at this particular time, just that market found some demand at this particular time, and that is called a swing pivot. That's it. Okay, it is at this point of time, a real time, that market found support at that particular point where there is too much supply. There are people who are looking to buy, sometimes called as bottom fishing as well. Okay, so these are the ways how we can find the supports and resistance zones. So price movements between supply and demand, yeah, you can go through all these things. I will go through something important. Okay, so pivot point trading, floor trader. Okay, so basically I'll give you a summary of what we did here. So the pivot support and resistances are the support and resistances calculated by the high, low and close of the day. Okay, you can go through the theory of it. So these are the levels where market finds a resistance or support and comes down or goes higher. Okay, so these are the levels. It is, I have already always told, support or resistance is not one particular number. Okay, rather it is a zone. It can go to 9600 and afterwards it may go up another 5 or 6 points also and then come down, and it does not mean that 9600 is not a resistance zone. It is a resistance zone. It has been and it will be. So what it does is it goes to that level, and there may be some buyers, some sellers who are still buying at that point, and afterwards there will be real sellers who will come in, and afterwards they will start selling at that particular resistance zone, because they want to see the market go lower and make profits. So at that point of time, when it retraces back, they will sell, and afterwards the market will go really low. So these are the pivot supports and resistance zones which you may take into consideration to find out the resistance and support for the market, and take a call only after confirmation, right? So if the support zone is held, it may get tested once or twice again than the first time when it hit the support or resistance zone. Okay, so after about 2 or 3 times, when it hits the level March, at that point of time, if it gains momentum, it will break that support or resistance zone. Okay, so after confirmation, make sure that you are buying or selling at the pivot supports and resistance zones. Okay, so that concludes pivot support and resistance. Let's go to the next one. I wanted to give information about the entry techniques. Okay, so entry techniques and execution. So where you'll be buying, where you'll be selling is something you have to consider, right? So let us say this is going in the, I mean, this is the trend of the market as of now. Okay, it keeps on going higher and higher, and at that point of time you will buy, and when you will be buying, and this will be your entry zone. So you have to find out how to enter at this particular time, right? Entry zone, so the price zone, and this will be your reward and this will be your risk. When you are short selling, this will be your stop loss, this will be your entry, and this will be your target. A reward should always be at least 2 times or 3 times your risk what you will be taking. Okay, so that way you will keep a healthy move ahead, and you will not be going bankrupt by trading. Okay, so when you hit the target, you will hit a jackpot. When you hit a stop loss, you will hit a small levels of loss. So this is the stop levels which you have to maintain. This is the entry. This is applicable for trends. Many of them have already asked, how will you keep a stop loss for scalping? You can't. You are the stock for scalping, and with respect to trend, this is applicable. With respect to sometimes with respect to contra also, it is applicable, however not every time. And contra is also your decision to sell at this particular time. Okay, when it is going in a direction south, when you thought that it will go north, it is a time to sell. Okay, so you have to have the stops strict, and you may lose about 10 points in about 2 to 3 minutes if you don't look into the trade. Okay, so that is one important thing. Okay, so this is the entry and this is the target. When the price action is happening, you have to enter, and when the price action is almost dying, you have to exit. Okay, so how will you go through the movements? So uptrend variations of price movements. So this is the uptrend going on, uptrend, and afterwards when it breaks down that trend line, it is the time when we will exit. Okay, so and when it takes a hit near the trend line again, then it is confirmation that this trend line is broken for real, and it will not come up very easily. Okay, so sometimes it so happens that it will break the trend line and afterwards it will gain momentum and it will go and take out the trend line. So at that point of time, you should sell. I mean, you should sell off your puts if you have any, if it crosses the trend line. Sometimes it may be a false trend line break as well. However, usually it will not be. Usually with trends, what happens is when trend is when trend line is nearby, it retraces back. That is how usually trend a line works. So almost coming near to it as well, it fears the market and it goes down. So or it goes higher with respect to trend lines. If it is a negative market or if it is a positive market. So if the trend line is drawn lower, it means that it is a uptrend and it keeps on going higher, and when it breaks, you have to verify that it touches the trend line again and afterwards it goes downward. So it means it is a confirmation that the market is going down. And with respect to breakout, it is the same way. When it breaks out on the top of the line of the support or resistance zone, and it takes a support again at the resistance, the previous resistance zone. Okay, it does the same with respect to breakdown. When it is going below the when it is going below the channel, when it is going below the support zone, it means that it is a breakdown, and you will be selling at that point of time with a stop loss of two times the high of previous candle. Okay, that will be your stop loss. I'll get into more of it in stop levels, which is the next lesson. Okay, so this is the entry level. How you will be entering the market is at this point. So how you will get to know that this is a good risk reward ratio? You will enter at one point when there is a cross of the price action above the 2021 day TMA. Okay, so when it is 20 EMA, which is usually the resistance zone, when it crosses that, you will take a trade, and afterwards you will wait for the target of whatever the point you have set. If it is considering the resistance, if it is considering the Fibonacci, you will usually set the difference between 0 to 61.8% or 61.8% to 100%, and afterwards do a projection and take a buy target, or it will be the sell target as well. Okay, so sell as in you will only be buying puts over here. So you will be selling the put when it is going to the level of projection of Fibonacci retracement. That is one of the ways you can verify that your target is being hit. Okay, so this is the reward. It should be at least two times than your risk. That way you will stay healthy. When you are hitting the stop loss, it is small and the target should be big. So the odds of success depends on higher time frame market cycle. Usually what happens is when you consider the market in 5 minutes, 1 minute and for 1 hour, when everything sees downside, it means that the market is going really low. Okay, that is ideal situation. Okay, so when it is in different time frames, you see everything going down, it means that it is a negative trend which has already started and in play. And if it is going higher in other time frames usually, then it means that the market is higher as of now. It is in the uptrend. So downtrend variations of price movement. So when it is going down, what happens is you will draw a trend line to the tops. So there will be no top which will go ahead above the trend line, and you will draw the trend line, and afterwards when it crosses the trend line, when it goes near the trend line, you have to wait for confirmation. When it crosses the trend line, what you will be doing is you will be going ahead and taking a call only after confirmation that it touches the resistance zone, that is the trend line gain, and afterwards propels higher. Okay, that is the downtrend breakout. So the breakout really means is it is breaking out of the negativity and there is a reversal of trend in the making. So breakdown means that market will hold for one support zone and afterwards it will go below the support zone, and it means that there is a breakout. So usually it will suggest a more negative market or a bear market. That is what it suggests. And it does the same thing when the price action goes below the 20-21 day moving average. You will be selling, and at the point where you will calculate the target, you will take the targets. Okay, so let's go through the stop, where you have to place the stop and all those things. Okay, so the stop level is calculated according to this. So you will look into the bullish piercing pattern or bullish engulfing pattern or bearish engulfing or bearish piercing pattern, and afterwards take a trade according to that. So these are the swing pivots, right? So the swing pivots is the low of this candle and high of this candle. So when it takes support or resistance at the low of this particular candle, which is a bullish engulfing or bullish piercing pattern, or it has the bearish one, it means that there is a support at this point and it will go higher when it takes a support or resistance at those levels. So the swing pivots, so it means it has support or resistance at those levels and we can consider for buying. So these will be the stops where you will be placing. So basically, yeah. Okay. This gives in clear information about this. So the Fibonacci levels are to be verified when we are taking the stops. Okay. So usually it will play as support or resistance zones, right? So Fibonacci levels act as resistance zones when it is going higher, or when it is going lower, the same thing. It will act as supports when it is going lower. Okay, so you will have to verify, you have a clear confirmation that Fibonacci retracements are being held upon, and at that in that level where you are taking a buy is above the particular resistance level or below the particular support level. Okay, so you will be considering this and afterwards buy or sell accordingly. Okay, so you will place a stop loss. uh, here it is mentioned that stop loss is up according to your whims and fancies, how much ever you want support and resistance. Oh, what I have mentioned over here is it is for a conservative targeter, conservative trader who wants to make consistent money and he is okay with small amounts of money as well. Okay, so what you will usually do is when there is a confirmation that the market is going higher or market is going lower, what you will do is buy at one particular candle when there is a reversal happening, and place a stop loss at the one to two previous candles top or previous candles bottom. Okay, so that is the stop levels which you can follow as well. Usually I will keep it when I'm considering a resistance, I mean the Fibonacci retracement levels. What I'll be considering is I will either look for the 100% level to be breached and then take a resistance and it may go really low. So above after this, so usually 100% will be the support zone. If it is coming down, if the market is coming down, if it goes below the support zone, it means that it will go lower. Okay, so that is the reason I will keep about 2 to 3 points below the Fibonacci retracement level, that is 100% or maybe 0% as well. Okay, when I'm buying a put, I will keep it this way. That is, I will keep the support. I'll keep the stop loss below about 2 or 3 points below the 100% level. So it means that though support is barred, sometimes it may find support around those levels. Probably it breached 9600 and it is kind of moving towards 98 99 I mean 95 96 levels or so, and afterwards it finds support and it moves higher. So at those points I should not be in loss. Though it came to the support level, it goes a bit down, probably about 2 or 3 points. I will keep a stop loss about 3 points. So and afterwards trade, because usually what I have verified is when I had been back testing in US somewhere around 2012, I have found that when the Fibonacci retracement 100% level is reached or 0% level is reached, usually it will not go really low and then retrace back. So when it is going lower, it may go low by 1 or 2 points and then it may retrace. That is my finding in the back testing which I had done in US around 2012. Okay, so usually I'll keep below the 100% level about 3 points lower for the stop levels. Okay. So the protective stops are when there is reversals happening. Okay. So when there are reversals, it means that the market is actually giving a signal that it may go lower or go higher. So at those levels, you have to you have to take the trades down or take the trades out. You have to either sell it off or you have to reduce your levels of exposure to that particular underlying asset. So you will see that there are phases in this as well. So sideways bottoming and afterwards there will be a bullish rally, there will be a sideways topping reaction, and afterwards there will be a bearish rally. So what happened recently is the market touched the almost 9700 levels, and 97 is a very strong resistance. It is a psychological level, so it is resistance. It came to the levels of 95.16, and it closed. So that is the resistance, that is the major resistance. Okay, so usually what happened is, at the top it started slowly, it started consolidating and all those things. So the since the market was really high, then the thing which we were considering is the market will go really high, and it has a momentum already in place. So who knew that there will be a tweezer which came up, and after tweezer came up, the market went really low. Okay, so there will be a sideways stopping action, and afterwards there will be a bearish rally, and afterwards when it is bottoming up, there will be sideways move as well. Okay, so, what this infographic gives you information is, so when you are entering somewhere, stops underneath this optimal entry level. So when you will be taking a trade is when you have a clear momentum indicator that there is a big huge candle which is breaking the resistance zone or breaking the support zone, and at that point of time there is movements like MACD, which is rejoicing. It is giving a breakout, and it is moving really high, really huge. That is one of the things which you will be thinking of as well. And after the market is either topping or market is either bottoming, you will see that there is again tweezers coming up, which means that it is either a bearish or a bullish pattern. So when there is a bearish candle to the second one, it means that the market may go sideways or go low. And when it is a bullish candle to the right, then it means that the market may go high or really higher, or it may go sideways. So those are the indicators which, I mean, those are the things which tweezers indicate. Okay, so let's verify where we have to enter and where we have to exit. So this is one of the zones where it is a risk level. So you will be placing a resistance below. You will consider this particular candle to be your pivot. So considering this candle low, you will consider the top to bottom of this candle and calculate here, and this will be your stop loss if you are going on a trend trade. So, and that is one of the ways how you can place the stop levels. And if you are going short, what you have to do is you will calculate the distance of this, and 50% of this you will take to the top and then place a loss at the top. That is what you will be doing when it is a stop, and it is a 2 3 reversal, 2 3 bar reversal. It means that there is there are two bearish candles, and afterwards this bullish candle is almost piercing. It is a piercing one, and afterwards it hits the previous to previous level of the top on the red candle or maybe the green candle, right? That is what it is. So if it is a red candle, you will say top. If it is a green candle, you will say it is bottom. Okay, so these are the levels where you will find the stop losses, and if the stop loss is hit, always sell it off. The market may reverse, and it may give you the required return. However, it is not worth of it. So you can do many more trades before the stop loss level is hit as well. Or if the stop loss level is hit, sell it off, and afterwards you will do much more trades if you're if you are really cool. Okay, if thinking that your stop loss hit, you should not try recovering all the money. However, you should actually keep cool of yourself and start making consistent money. Market will always make you losses. However, losses should not be high, but the profits should be really high. That is what it is. Okay, always trade with stop losses. This is one of the things which I keep on iterating again and again. So learn to identify the price action area where, if broken, the setup is clearly nullified. So what it means is, find out when there is indicators which are flying all over the chart. You have to find out that the market is giving a bearish indicator now, or a bullish indicator now, when it is going in a bull trend or a bear trend. Okay, so when it is a bearish indicator, when you have taken a uptrend trade, it is time that you sell it off. Okay, you have to make sure that you sell it off. You will keep the trailing stop loss and all those things, everything is fine. However, when the market is giving a bearish signal, it is time that you sell it off. And when it is giving a bullish signal, it is time that you sell off the put, and afterwards start buying calls when you have the confirmation. That is one thing. And you have to have the eyes always open to the technical chart. When the technical chart is showing something which nullifies the effect of this particular candle or this particular price action, this particular strategy, it means that you have to keep your eyes open and sell the underlying asset which you have, and afterwards buy something which is good enough for a trade. At that point of time, you have to sell it. Okay, so most traders focus on placing their stop losses close, trying to minimize initial risk, stop close to the entry point. So if you do this, you will always be stopped out. If you are trend trading and you place within 1 or 2 points, if you are buy, I am only considering about Nifty and the Nifty options as of now. Okay, so if you just keep about 50 paisa of stop loss, it means that you will always be hit. Market, though it is going higher, it will come down and then go up. When it is going down as well, it will come up and go down. The options too. So the market will make the high prices higher and then lower as well. So you have to verify that if you keep the stop loss very close, your stop loss is almost hit every time. Okay, with respect to swing, you have to keep the stop losses low, because you are making so many trades to make big amount. Okay, so stop loss very near to the buy price is harmful for you. You will lose more money than making more money. Okay, most traders focus on placing the stops close. Okay, so you will not do it as of now. And seasoned traders learn to identify the appropriate stop location and time the entry near it to risk and reduce their risk. So when you are taking a trend trade, you already know what is the previous pivot support level. I mean, that is, previous pivot support level means that at this particular point of time the market will come down and afterwards go up. Okay, so you will know at that point, you will place the stop loss below this pivot support level, uh, probably 2 or 3 points lower than this, and afterwards the market may go higher from this zone because it is already a support. Okay, so since your stop loss is not hit every time, you have to make sure that it is reaching the pivot support or resistance zone, and afterwards it plunges higher. Okay, you have to make sure that you keep that in mind. Okay, so you have to
calculate the stop loss right before you have entered the trade. Okay, you have to keep the stop loss right before you enter the trade as well, so that way you may not have that much amount of leverage all the time, because market, when it crosses the resistance zone, it is like gone, it has gone like a bullet shot. Okay, so it will not wait for anyone to give out uh, signals, all those things. When it is a huge move, uh, you will be stuck if you don't keep the stop loss. In minutes of time, it may reduce by about 5 to 10 points very easily with respect to options. So when you're taking a trend trade, always keep the stop loss in mind. Okay, so usually I keep around 15 points below the particular exit trade. Sorry, not 15 points. So I was talking about the stop loss, right? So it will be about 3 levels, and 15 points above the entry trade for target. That is my target zone. 15 points is my target zone. About 3 points below the pivot support zones is my target for stop loss. So if stop loss gets triggered, this is the place where it will get triggered. Okay, and the crucial ingredient is the time stop on each and every trade. So if the market is moving really in sideways direction, it is better that you exit out of it. You never know that if there is a leg down or leg up, it may trigger huge losses for you. Okay, so which you are not ready for, because the stop you have placed is for the slow movement, and when it is a big movement, you will not be ready for the big swing down or higher. So at that point of time, it will get easily stopped out. So always when it is moving sideways, keep a strict stop loss, and afterwards or it is better that you exit, and after the momentum indicators indicate something, you take the trades. That is the best way. So stock types, there are many things which you can consider. Give me a minute, I'll take a gulp of water. Okay, so there are different types of stops which you can consider. So it may be fixed rupee stops. If you want, some people will buy it like this. So they are buying Reliance at 1350. Their target will be 1375. So they will say 1375 is my target, and the same way they will take 1350 as the stop, as the buy zone, and afterwards they will say 5 points below this I will exit. So it has the fixed rupee stop. So at that point, at 5 rupees below this entry, I will exit. That is the strategy they will follow for stop loss. Okay, it is the same way for target as well. It can be followed. And the second way is should be based on reward and risk method. So if the so there are too many ways how you can find out the risk to reward. One is it touches the trend line and afterwards it goes really high. How much is the risk and how much is the reward? And the second is the Fibonacci series. It may come to the support zones in Fibonacci, and it may go high. If it is going above the 100% zone, it will go from 61.8 to 100% zone, and afterwards you can calculate accordingly and you can place the trade. So that is, the reward is 2 times whereas the risk is about one time. So when you are buying at 61.8 level, so you will be placing a stop somewhere around the 38% or 38% or maybe 0%. And 61.8, when you are purchasing above the level, then you will be having two times the reward of the risk which you will be taking, right? So most widely used type by all levels of experienced traders are the it provides the percentage stops, provide most traders with the psychological advantage, and the risk reward is most widely used and provide most traders with psychological advantages, something like 9700, 9750 as the targets, or something like 9650, 9600 as the stops, or as the short levels, short targets. Okay, so you can consider the 9650 is the stop for me. You will say that I will buy when it goes above the 9650 levels, and it hits the support zone of 9650, and afterwards you will say that okay, I'll sell it at 9650 level, because it is a psychological support zone or psychological resistance. It goes if it goes below, if it goes below, that is the reason you will sell at that particular psychological support zones or resistance zones. So percentage stops, you may consider 10% of my amount what I'll be investing is my stop loss, or 1% of my amount which I'm investing is my stop loss. So you'll consider the stop loss accordingly and then play for it. And price action movement for chart time frames. So it can be time frame based stops, 30 minutes, hourly and daily. It can be any of these 30 minutes time frame chart, hourly time frame charts, or daily time frame charts. According to that price action, you will either buy or sell, and according to that you can place the stop loss as well. So let's say that the pivot resistance zone previously was, sorry, pivot support zone previously was around 30 a minute time chart pivot low, and we'll place the stop loss at that particular point, and afterwards trade for higher ones, higher targets. Same with hourly as well. So you'll place the pivot resistance, or you'll place the stop loss at pivot hourly chart, and afterwards take the reward of two times the stop loss, or the daily chart as well. Okay, so the other ways of placing the stops are technical analysis based stops, like pivots, support and resistance, Fibonacci levels and gaps, all those things. So those are the other ways, the chart patterns and break-even stops as well. So there are different levels how you can place the stop losses. Always do paper trades and find out what is the strategy which will suit you. If placing the stop loss at a percentage works out for you, like I will only lose about 1% of whatever I have invested, so that will be your stop loss. 1% is what I'll risk, so that will be my stop loss. That way, if you want to trade, or if pivot levels have given you good trades, always try, when you make a strategy of your own, always try and fix for something which is working good for you, because everyone's mentality is different. Some of them are really aggressive, just like me, and some people are really too timid. They don't want to spend too much as well, they don't want to risk too much as well. So they are okay with 30 paise per day of movement, and I will go home. Yeah, fine. I will not. go home at least if I don't get 15 points per day. So there are different kinds of traders. So you have to find out what stop levels work out for you. If it is the time frame based stops which will work for you, pivots, supports, resistance, Fibonacci levels, gaps, all those work for you. Fixed rupee stops, like I will buy at this particular point and I'll keep 2 rupees lower as the fixed rupee, I mean stop, fixed stop. So that is one of the levels. You will see the risk reward ratio. If the risk is about 1 and your reward is about 3 times, then you will keep the risk at 1 time uh, of the reward which you will be getting as the risk ratio, that is at the stop level. So you can find out which suits for you and afterwards place the stop losses. When you are scalping, you don't have any option other than you being the stop loss for yourself. Okay, so if you actually have stop loss set for scalp, by the time you trade it, either the market would have gone really low or market would have gone really high. Okay, scalps cannot have a stop loss. Scalp is nothing but you are trading for the speed of the movement in price action. So that is what you are trading for. So within the volatility, if it is going higher or lower, it does not matter. According to the volatility, you will be taking the trades upper or lower with respect to options, which is calls or puts. When it is going higher, you'll be buying calls. When it is going lower, you'll be buying puts. And with scalps, if you keep on waiting for the stop loss, you will lose it. Okay, so always when you start scalping, right, so it is always better that you start scalping only with one lot. Okay, I have traded up to about 17 lots in Nifty options. However, there are slippages which play the role over there, and I did not I did not feel comfortable that when I'm buying at market level, mm, there may not be so many people who are selling 17 lots at one point to buy at one particular price level. So I may have to wait for about 15 to 1 rupee to get down, 15 paise to 1 rupee to get down for all of the 17 options lots to be bought. So rather than having such kind of thing, it was better that I traded with lower levels of lots and managed the stops correctly. At that point, what happened is, by the time it got stopped, by the time it got bought, uh, almost my price would have again gone down, because when it is market, usually it keeps on swinging high and low, right? So it either buys at a higher level or buys at a lower level, because there are 17 of the lots which has to be bought. So that way I did not find it comfortable. I reduced the lot size, and now I trade only with about 4 lots maximum on every day basis for scalps. Or if it is trends, I'll trade with higher volumes. If it is scalp, it is with very less volumes. So as of now, okay, so stop levels, you can find out what works for you, and afterwards you can take the trades accordingly. Okay, something very much important. So you will have to find out, break even is very important for any trader, right? So whenever the market is going higher also, uh, break even levels have or reached. However, your stop loss has to be trailing to keep your break even a bit higher than your entry price, because you will have the brokerage you'll have the taxes, all those things playing spoil sport over there. So you will not make all the money which you have made. So maybe you have made about 10 points, only about 7 points is yours, the others is to the government, and some of it is to your brokers, all those things. Okay, so you have to break even point as well. It should be a bit higher than the level which you have bought it at. Okay, that is one thing which is important for you. Okay, so the break even rules and how you'll manage the trades, how the survival of you and everything. So using a reward risk model and using a money management approach, 1 to 2% risk to reward a ratio. So that is how you will find out if you can at least reach the break-even levels. Okay, and you will find out the current trading circumstances. Your intraday net profit is positive, your net, it is a negative, or first it is the first trade of the day. You have series of winning trades. All these are the mindset which is required for you to attain consistent returns in the market today. Okay, so if you are having series of winning trades, you may jump in joy and see that, okay, I will take more aggressive trades and afterwards lose everything, not following the stop loss. Because when it is, you very recently, right, on Thursday I suppose, market went to the levels of 9700 and afterwards fell to the levels of 9600. So what can you say, at that point of time you have series of winning trades. When the market is going higher and higher and higher, it keeps on going higher, and after some point of time what will happen is market comes so low that all your all your profit is erased and it goes to the negative zones on your money. So it will be a huge loss for you. So when you are having really winning trades for the day, don't give up on the technical charts. Keep an eye always on it. When there are signals that it is reversing, make sure that the market, I mean, make sure that you sell it off. Okay, so those are very important. When there is a reversal signal shown on the chart, make sure you sell it, and afterwards, probably, if the market is going sideways, then wait for a more downtrend to happen and buy a put, or maybe buy it at that point of time itself when it is going really low. Okay, so, or you have a series of losing trades. At that point of time, when you are buying anything, you will think that, okay, I will not make much profit today, so I will sell it at just 1 paise, or I mean, at just 10 paise or 20 paise on one particular option. So that way, if you are actually doing that, uh, you will lose more and gain very less. Okay, so you have to have the mindset that, okay, if there is a technical indicator suggesting a buy, you have to buy it. Okay, no matter what. So if it is showing a sell, you have to sell it, though you are sitting in a big profit, or though you are sitting in a big loss. Okay, it is time that you get out of this or get into this when there is a technical indicator. I mean, not one technical indicator is supportive, and every time it can help you. However, there should be about 2 or 3 signals which gives you um, an indication that it is going up. At that point of time, you have to buy it. Don't sell at that point. You will lose really huge. Never stand in front of a moving train. You will be hit really hard. Okay, you never know that how many kilometers it can drag you down. Okay, so uh, so the mindset is very much important over here. Okay, so so when you have to survive in the market, you have to always focus on objective of good targets and tight stops. I spoke about this in the previous lessons. Focus on objective of good targets and tight stops. Uh, whenever there is whenever there is a potential of an underlying asset to go higher, you have to buy it. Okay, though it has made really a huge you know cuts in your pockets, if it is giving a buy signal. Oh, I'm really sorry. I have been talking on mute. Um, so you have to always focus on good targets and tight stops. Always, when you are making money, you should be making money chappar fatke, and when you're losing, you should be losing like a miser. Okay, you should not be losing more. You should be losing very less. A good rule of thumb is to attain a return of 3 times as much as the amount risked. Yeah, so that is one of the best ways how you can keep all your profits with you and not go into loss. The whole reason why you are trading is because you have to make consistent money, just like your salary, right? When you are trading and you lose too much and you gain very less, it means that it is not consistent money, which is just like your salary, and you are risking too much by putting your money and making nothing out of it. Then why should you be actually trading is not required for you if you are risking too much. Always keep the stops tight. When it hits the stop loss, don't think twice. Let it hit the stop loss and let you get out of it. Okay, so don't think twice, because I have I have about I think this is the ninth year of me trading. Okay, whenever I have barred the stop loss, it has made a huge hole in my pockets. Okay, not all the time. Sometimes it has reversed as well. When it is up and down market, it has reversed as well. However, that reversal is not a reversal which I hold for a long time. Usually I will think that the market has already gone so higher, so probably it may not go much higher, and afterwards I'll sell it off. So I will not make big money. However, I'll lose more when it is going down, and I will think that okay, the market may reverse, market may go up, come up, and keep on waiting for it. Though all the action has already happened, and there is no sheen left in that particular stock or particular uh, underlying asset. Okay, so whenever I have barred my stop loss, market has hit me really hard. Okay, so always keep stop losses tight, and you have to maintain good targets. I always keep, if you are following my blog, you should already be knowing, I keep on increasing my stop loss. Okay, my stop loss, if I buy it at around 79 rupees, I'll increase the stop loss to the break even level as soon as possible. When it moves a bit more than whatever I have purchased it at, it is better that I move the stop loss to the break even level, that is the buy price. When it moves about 5 points or 6 points, it is better that I take some profit and keep the stop loss about 2 points or 3 points higher than the break even level, because I am already making money. If I sell at this point of time, I want to ride the upside, and that is the reason I'm keeping a trailing stop loss there. Okay, so I don't want to be hit by a zero profit when I am already in about 5 or 6 points profit. Okay, so break even is very much important. Always increase your stop loss to the break even levels as soon as possible. Okay, to attain consistency and profitable trades in long run, your rewards must be much higher. Learn to utilize position sizing. Okay, so position sizing is very important, guys. When you are trading, probably if now you know that, now you know options trading, you may foray into options trading at some point of time. However, when the market is really volatile, don't trade with really high volumes. You will not be able to manage all the lots. The lot size should be smaller when the volatility is really high. uh, I have about 5 years of experience. I can't trade with about more than 4 lots, and if you trade with more lots when there is volatility, it means that then you will just be swiped out, like a tsunami is coming and it will just swipe you away in about minutes or seconds when it is too volatile trade. Okay, usually on the days of expiry, and usually on the days when the Reserve Bank is announcing some things, all those days are the times when the market will be really volatile. When it is really volatile, don't trade with higher positions. Uh, positions as in the sense it is higher lots. Don't trade with higher lots. It is okay to make about 1 point with one lot rather than making zero point 0.5 rupees a loss with 4 lots. Okay, so you are now understanding what is the profit level and loss level over here. If I lose 1 point with one lot, I will be losing one lot, 1 point. Okay, that is into 75 with respect to Nifty. If I am trading with 4 lots and I am losing just zero point 0.5 points also, zero point 0.5 multiplied by 4 is 2 points multiplied by 75. So I am risking too much when I am trading with higher volumes or uh, higher levels of lots. So don't take your position too much when there is volatility. When there is less volatility, you can take the positions, that is not a problem. However, always keep the stop losses intact and trade. Okay, so when you're taking leverage of about 10 times on stock trading, and your stock goes down by 1 point or 2 points as such, you will be hit. If it goes down by 5 points and you are still holding, your whole amount whatever you have invested is already gone, because you have taken 10 times the leverage and you have traded, and afterwards when it goes down by 5 points, your 5 points multiplied by 10 times is your loss. So don't take higher positions. That's okay to make 1 point or lose 1 point with one lot rather than losing zero point 0.5 points with 2 lots or 4 lots. Okay, so it is always better that way. Okay, so learn to utilize position sizing. You have to verify what position suits you, and then if the risk reward ratio is favorable for you, then take the trades. And using a scale-in method allows you to focus on whether to trade setup is adequate. So what the scale-in means is, you keep on going in small amounts. Okay, so when there is an indicator of market going higher and it has almost a resistance level, before that you will take small trade, and that is a small buy on the underlying asset, and afterwards at the level of resistance you will buy a bit more, and afterwards a bit above the resistance level you will buy a bit more. So that way you will be scaling in your positions. So when you are scaling the positions and afterwards you can concentrate on something which is going higher, and at what point you can keep the trades target and afterwards exit out. That you can focus on very easily because it is going in the small levels which you are taking, right? You are not taking everything at this point, and after 3 seconds it went into the bare bottom, so you have lost almost the whole of the trading account which you already have. Okay, so underneath every reward risk ratio is two groups of trades: winning trades and losing trades. Incrementally improving the quality of your setups and filtering for more training trades, you can increase this category: winning trades. So winning trades should always be higher than the losing trades. And there is one more thing: though you are winning, you should be winning big; though you are losing, you should be losing less. Okay, so only then your profit to loss percentage will be in profit levels and not in loss levels. Okay, so the same thing with losing trade. You have to verify what criterias are bad, what are the failed setups, and all those things you have to verify and afterwards improve. So profit and loss starts out positive. Intraday trading profit and loss starts out negative. There are two ways how you can think, and in each of the situation, think of what you will do further. Okay, and afterwards set the mood accordingly, and then trade. If you don't want to trade, when you start with a negative, if you feel that it is good for me to stop trading for the day because your mood already got negative, you may always see that one person's face is always yellow because you have already lost one thing, and now you always want to see it with the suspicion that it may go down. Okay, when one time you see one person's face is yellow, he has jaundice, you will always see like this person has jaundice, and you will always feel like this person's face is yellow. So that way you should not be. Okay, so keep your mind calm and afterwards trade accordingly. If you feel that it is already overwhelming you, then better stop trading for that day. Okay, so aggressive survival techniques, read through all these things. There are too many things. One main thing is stay away from hope mode. Okay, so you will hope that market will go higher, hope that market will go lower. Never do that. Okay, so you can find out the targets. It is the same thing like placing the stop losses, how you can place the stop loss. All those things are determined like this. Okay, so the same way you will find the target levels as well. What suits you is what you have to find out. Okay, so I have given you three ways of trading, right? So out of which if trend trading is suiting you, or the scalp trade is suiting you, or contra trade is suiting you, it depends on you. I suggest you do all the three, because not one technique can give you a consistent money every time, always. Okay, so you have do all the three to make money, okay, on a consistent basis. So best stops or targets with market cycle. So there is a showcase of good targets and good stop levels, which is shown over here. It can be a good stop after you have bought at one particular point. The pivot stop level can be one a good stop level, or it can be there were different ways how you can find out the stop levels. So that way you can find out, or it can be the other way around as well. So if you want to find out the good target, you will find out in all these ways. So the projected Fibonacci levels is what I will usually use. So if it goes above the Fibonacci levels, I will purchase for the market to go higher. When it is going higher, I see a momentum in the market. It is for moving higher than the Fibonacci levels, Fibonacci retracement levels. I'll project the Fibonacci retracement, and afterwards I will give the target for myself that the market will go these many points higher. And till date, almost about 95% of the times this projected Fibonacci levels has always worked. Okay, so only about 5% of the times it has not worked. However, trend trade has not made a really good percentage levels. It has only worked for me about 83% of the times. Every time there will be a bit high, a bit low, or a bit high. However, 83% is on an average. 83% has always worked the trend trade. With respect to the target levels of Fibonacci projected levels, it has worked 95% of the times when I am trend trading. Okay, so it has only not worked about 5% of the times. So almost always it has worked. So you know how to set the stop losses and the targets as of now. So you will set the stop loss and targets accordingly. Targets is set in any of these manners, and you will find out and you will find out if it is opening range breakout. If it is opening range breakout, then it means that it is going higher. Okay, yeah. And you if you feel like there is a particular support level, it has reached a bottom level, and it is going higher, and afterwards at the Fibonacci retracement level of 76.4%, and above it is going higher, you will wait for 100%. And I mean about 61% of the time, 61.8%, there may be a momentum showing up, so buy at that level. And after you buy that, you will see a projection level of 61.8% to 100% above the 100% level, and then stop trade for the targets. Target 1, target 2, target 3, difference between 61.8 and 0. So that is the target 1, and the second target is plus target 1 plus target 1. I mean target 1 level plus the difference between the Fibonacci 0% and 100%, and target 3 will be target 2 plus the Fibonacci retracement difference levels. Okay, always I will be trailing the stop loss higher for the first break-even point, and then for the for 2 points above the break-even point. That should be fast enough, because you should not be losing the trade when you're taking a trend trade. Okay, trend trade is taken when you see a momentum and it has to go high or it has to go low. Okay, when you see a momentum only, you will be buying we will be considering a trend trade. So break even levels should be moved, or the stop loss should be moved to break even levels as soon as possible, and then you have to be a bit profitable when you take a trade as well. So move it about 2 points above this, and you will be able to take profits home as well when it comes down too. Okay, and after you have reached the target 1 level, what you will do is your break even level will be about 5 points to 7 points lower than the target 1, and that will be your trailing stop loss. Then when it goes above the target 1 level, about half of the target 2, half level to the target 2, target 1 will be your stop loss, and then at target 2 your break even level, your target 1, or about half of target 1 to target 2 is your stop loss. That way you keep on trailing the stop loss and you will make money. on a consistent basis. Okay, so I will give you some levels which will give you a good entry point, and it will give you information about the stop levels as well. Okay, this is a good entry setup. So this level, it broke a flag pattern. This is called a flag pattern. So there was a channel which was going through, it broke that channel, and afterwards it went higher. So this is one of the good entry zones, and afterwards it kept on going higher, and afterwards again it formed a channel, it broke this channel level, good entry point, and afterwards it formed a channel again, and afterwards it broke this, it is a good entry level. So keep on trailing your stop losses and afterwards trade. That way you will be making good money, consistent money. Okay, so these are the entry levels, these are the places where you will enter. Okay, so there is a Fibonacci retracement level drawn over here, that is giving you information about where to buy, where to sell, and when it is going higher. Look at this, when it is going higher, it comes to the Fibonacci retracement level. Usually it comes to the Fibonacci retracement level here, and it comes to the Fibonacci retracement level here, and afterwards goes up. Okay, so those are the places where it will be good levels to enter. And after that, 30-minute high and low. So these are the 30-minute high and low time frames. So after moving above the 30-minute high and low levels, that is that time, it is good entry point, it takes support at that time, and afterwards you can enter, and afterwards you can exit at the high point. Okay, when it is breaking below the moving average. So here you see that there is a double bottom, one is here, one is here. It shows that there is a good support over here, and afterwards you can trade higher. Okay, so there is a small breakout happening above this level, because there are so many times it has held this particular resistance zone, it takes support right over there. This is a good entry level. Okay, all these are entry levels, and it is a good entry level for buying, and this is a good entry level for selling. Okay, because it has gone below the moving average, and afterwards it took too many resistance at that same level, and afterwards it started moving lower. So this is the 20 day moving average, that is the close. Okay, so you can buy at this particular zone, and afterwards below the Fibonacci retracement level you can keep the stop loss. Okay, because support zone is not exactly at that point, particular point. It may go down a bit, maybe 1 or 2 points, and then take support. If it is going really low, we don't want to keep it, because we are actually not making any good progress with that, and it may go really low as well. Okay, so these are the stop losses which you will be placing. So this is a opening range breakout. So opening range breakout, and afterwards when it moves higher than the opening range, it is good time to buy, and afterwards it will usually move higher. Okay, and these may be your uh, confirmations that it is making higher lows, uh, higher high, one higher high, and higher low as well. It is making good uh, higher highs. That is what is expected with any stop, okay, any stock. Okay, so you can buy over here about the opening range breakout. There is some movement over here, highs, and afterwards it starts the sideways movement, and you have a stop loss somewhere over here. So you will be here, and you will be moving higher. So as soon as you buy this and it goes higher, your stop loss should be at the break even level. Okay, so move the stop loss to the break even level. Once it moves higher, then it will it will not reach that particular level usually. So when it moves again higher, then move your stop loss level a bit high. Okay, after it retraces and then goes up, move to the level above, maybe about 2 or 3 points, so that you are not in loss though the market comes down. And after some time, when it is going sideways, it may not reach that particular level because it is about just about 2 points or 3 points, and afterwards it may move really high. So at that point you will exit. Okay, so when it moves high, you will exit. Okay, so you'll be starting with a plan of attack. You have to find out what is the risk reward ratio which is favorable for you, and afterwards focus on creating as many free trades as possible. So you have to find out what level of aggressiveness suits you. If you are a aggressive trader, if you are a timid trader who doesn't want to take risk, then what suits you is what you have to find out. So according to that, start with two stops, two targets, and that way when it is a drawdown, when the market is going down, uh, how much of the profits am I willing to give back? So retracement is always there. So market may go down from those levels also, or it may retrace back. Okay, retracement, if the market doesn't retrace, it means that market is not healthy. If it keeps on going high, or if it keeps on going low, it means that there may be a huge fall, or a huge a huge uh, trap in it. So if it doesn't retrace, it means that it is a unhealthy market. So you have to maintain what level of target or what level of stop suits me, and afterwards you will find out what suits you, and then you have to plan the attack on the market. Okay, so start with paper trades. Look for target levels what suits you. Look for at the stop levels what suits you. How much stop will get triggered in bull market, how much of a stop will get triggered in a bear market or in a side market. Find out all those things and afterwards start trading. Okay, every trader's objective, let profitable trades run. So yeah, you need to identify that trade is in uptrend or downtrend. So you have to find out that let the profitable trades run. So you have to move with stop losses, trailing stop losses, and at the point when it is going really high, and it is a time that there is a change in the momentum. When there is change in the momentum, it is time that you exit out of it. Okay, so it means that you have stop loss in place, and after the stop loss is hit, you better get out. Okay, so stop loss is very important when the market is changing the trends, if you're not in front of your technical charts. Use trending principles and higher highs and higher lows for stops, and lower highs and lower lows for stops when it is a uptrending market or low trending market. Okay, so this is the chart which will give you information if you have to buy at this particular time. When if the bullish rally is happening, you have to see where you have to place the stop loss. When the stop loss is hit, you get out of it. Okay, until there are momentum channels candles emerging, you better not enter into it. So after it is topping, the MACD signal usually gives out indication that it is topping out at the tops or at the bottoms, and you better follow it and get out of it. Okay, so I need one more class tomorrow to finish the trader's mindset. So that is the conclusion. So if you have any questions, I am ready to take now, and we will have one more session tomorrow. It was a 3-week class, since there was one class which we missed, because of the power cut, and one class I was not keeping well. I couldn't complete everything in 3 weeks. So I need any questions. If you have, I will take it up. So I will be back in about 5 minutes. After 5 minutes, we'll take the questions.